Welcome back to another episode of Fire Trail, the show that's all about helping you achieve financial independence and retire early. I'm your host, Xiao Yu, and today we're delving into the intricate world of taxes, focusing on the topic of tax extensions. Let's begin by grasping the essence of a tax extension. Essentially, it grants you an extension of time to submit your tax return to the IRS. The standard deadline for filing individual income tax returns in the United States typically falls on April 15th. However, if you require additional time to compile information or prepare your return, the option to request an extension exists. Seeking an extension involves completing IRS Form 4868, Application for Automatic Extension of Time to File U.S. Individual Income Tax Return. This form entails providing fundamental details such as your name, address, social security number, an estimate of total tax liability for the year, and the amount you've already paid. Filing for an extension typically offers an additional 6 months, pushing the deadline to October 15th. It's critical to comprehend that while an extension offers you more time to file your return, it doesn't extend the duration for paying any taxes owed. To evade penalties and interest on outstanding balances, it's prudent to estimate and remit as much of your taxes as possible by the original deadline. Remember, an extension is tailored for filing needs, not for delaying payments. Now, what if you're anticipating a refund? Filing an extension won't hinder it. Nevertheless, to receive your refund, you must still file your tax return, even with an extension request. The IRS awaits your completed return to issue your refund. Missing the deadline for claiming a tax refund typically occurs 3 years from the original due date of the return. Failing to meet this time frame might result in forfeiting your refund. Regardless of expecting a refund or owing taxes, filing your return, even after the extended deadline, is pivotal to avoid potential issues with the IRS. Now, what might one consider steering clear of tax extensions? First, filing an extension might offer additional time for paperwork, but it doesn't extend the tax payment deadline. Delaying payment beyond the original due date could lead to penalties and interest on the outstanding amount owed to the IRS. Second, procrastination in tax filing can elevate stress and uncertainty about your financial situation. As the extended deadline approaches, pressure mounts, potentially resulting in hasty and incomplete filings. Third, habitual reliance on extensions might signal underlying issues in financial planning or record keeping. Regularly seeking extensions could indicate a need to refine tax preparation processes or seek professional guidance for improved financial management. Additionally, if you're expecting a tax refund, filing for an extension delays its arrival. The IRS withholds refunds until they've received your completed tax return, potentially affecting your financial plans. Finally, missing the extended deadline after requesting an extension can escalate into increased penalties and legal ramifications. Failure to file and pay taxes punctually can swiftly snowball into added financial burdens and stress. In summary, while tax extensions serve specific purposes, excessive reliance on them could intensify stress, lead to potential penalties, and delay refunds. It's imperative to weigh these factors and explore alternative strategies for effectively managing your taxes. That's a wrap of our discussion of tax extensions and their implications. I hope this episode has provided comprehensive insights into tax extensions, payments, and refunds, shedding light on the significance of strategic tax management. Thank you for tuning into this episode of Fire Trail. If you enjoyed this episode, don't forget to subscribe to the podcast and leave us a comment. Thanks for listening. This is Xiao Yu, wishing you all the success and happiness on your financial journey.